Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, March 17th. Before we begin, from all of us at ToniTurner.com, we wish all of you a very happy St. Patrick's Day. And now, before we break out the green beer, let's take a look at the market. U.S. stocks are seesawing so far today, which is common on quadruple options expiration day. As well, the S&P 500 healthcare sector was off 0.4%, dragged down by a 6.3% drop in Amgen. Analysts said data from a large study testing the impact of Amgen's cholesterol drug on the heart was weaker than expected. Amgen was the biggest drag so far today on the broader S&P 500 index and the NASDAQ. Adobe, however, gave the biggest push to the tech sector. Adobe rose 6.2% after the Photoshop maker's quarterly results beat analyst expectations. And now let's look at three charts that could give us some insight and maybe even make us a little money in the week to come. First of all, as we usually do, we're going to look at a daily chart of our S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 benchmark index. As you can see, when I captured the SPY this morning, the SPY was trading at $237.35. Now, right now, at this moment, anyway, it's sitting just atop its 20-day simple moving average, which is the red line you see on this chart. So it's kind of white-knuckling this 20-day moving average here. As we can see, the 50-day moving average is rising underneath price. That's bullish, coming in down here at about 232 is actually where it's coming in, or about 2320 on the S&P 500 index itself. Of course, we know the 200-day moving average is way down here, or right around, just barely above 220. So our S&P 500 is still in a terrific uptrend, of course. It did make a new all-time high back here on March 1st of $240.32, or let's see, $240.32. So now we see the market is now looking around. We've had the Fed announcement. We all know that rates were raised 25 basis points on this past Wednesday. The market is now looking ahead. We're doing quadruple witching day today, which is kind of again, makes the market usually seesaw back and forth. Now it's looking to see what's next. Can the SPY actually stay above this 50-day moving average, which is definitely something I'm looking at? We have support here at 235. Then if we look down lower, we have potential support here at 230. And then we have more, I'm going to say, key support down here, right just over 225. Now, what I wouldn't want to see, if the S&P 500 has to take profits here, I wouldn't want to see it moving much down past or below 225, as that is really key support, and a move before that could signal, or of course we would have already had, take us into a little correction here. That could happen. As we look at the 14-day RSI here, we see that it is unimpressed with the market's ability to stay up where it is right now. The 14-day RSI was overbought back here at the first part of March. Overbought meaning the RSI was trading above the 70 line. Now it's fallen back below that. It's just above the 50 line. But as you can see, while the SPY is kind of making a little even potential, very shallow, nothing much to it, double top here, making this higher, a slightly higher high last week, or at least moving up a little bit. The RSI was not impressed with that move and is moving south. So while that's nothing to worry about, it is something to kind of keep at your elbow and say, well, the RSI is not impressed with the last move. As well, the MACD line, the black line, is moving below its red signal line. That's a very, very slight negative here when the MACD line itself is below its signal line. As you can see in February, when the MACD line was above its signal line, the market was definitely moving higher. So the MACD line is a slower indicator than the RSI. It's trend following, but it definitely can have give us really good information about what's going on in the market. So I'll tell you what I'm going to do here. I'm just going to add a layer of caution into my trading this coming week. I'm going to probably get into any new long positions with smaller share size and absolute stops until I see which direction the market's going to go next. Our next chart we're going to look at today is one that I wanted to keep an eye on. We looked at it last week. This is the iShares Russell 2000 ETF, symbol IWM. And as I've told you before, the Russell 2000, the small cap index, can act as kind of a leading indicator for the broader market. Now, the IWM made an all-time closing high right back here on March 1st, just like the other indexes, at $140.36. Since then, it has lagged the SPY and the QQQ, or the NASDAQ 100 ETF. It's not been as happy or enthusiastic as the other two indexes. And so right there, it's telling us that maybe the market's a little weaker internally than we think. At least it's something, again, to keep at your elbow. Today, when I captured this chart, the IWM was trading at $137.65, again below those all-time highs. It looks like it's going to sink right below now its 20-day moving average, and the 20-day moving average was moving horizontally. Now it's moving down a little bit. The 50-day moving average, the green line, is coming in here right at about 137. And as you all know, I was watching, last week I said if the IWM makes 3 closes below the 50-day moving average, then I'm going to, that's when the back of my neck starts itching. Actually, the IWM made 5 closes below 5 closes below the 50-day moving average. But then on Fed Day, amazingly, it pushed up this past Wednesday with the rest of the market and jumped back above the 50-day moving average. Now, however, today, so far, it's feeling kind of puny. We've got very low volume. I'm going to see if the IWM can stay above the 50-day moving average next week. Basically, what it comes down to is if the IWM is happy and above its 50-day moving average, I'm happy. And if the IWM is moving south, and if it comes down and breaks below 135, especially if it breaks down below this support area here, potential support, potential buyers, if it breaks below that at 133, then certainly I am extremely cautious, because a move down below 133 could indicate that the broad market is weak, and it could influence those indexes lower. So let's go on now and look at our last chart for the day. Today we're going to look at a chart we haven't looked at in quite a while, the iShares US Telecom ETF, symbol IYZ. As you can see, the IYZ has had quite a time since November of 2015. The iShares the iShares US Telecommunications ETF, that's the proper name, seeks to track the investment results of an index composed of U.S. equities in the telecommunications sector. Top components of this are AT&T, Verizon, SBA Communications, T-Mobile, CenturyTel, Level Communications, and Sprint, companies like that. And one of the things we don't think about sometimes is that if you were to look at a technology ETF, you would find companies like AT&T and Verizon and some of these other telecoms in the technology sector, technology ETF. So these guys are really big tech firms as well as telecom. And so I think if we look at them more in that direction, we can say that maybe right now these guys are a little bit of a bargain depending on what happens next week. Now, the telecom ETF in last November, we had a low here in 2016, excuse me, of $29.31. It fell down pretty hard here. That was when all stocks fell toward the election. Then, of course, everybody jumped back up, and then we had what they call the Trump bump or the Trump rally. Has moved up to, and then it moved up to a high here in January of $36.74. Since then, telecom has kind of got ahead of itself. It started moving south. I'm trying to draw a downtrend line here. And this is where, and actually the 20-day moving average did it for me, the red line. This is where I'm wondering if telecom can repair this downtrend. Can it here? That's the big question. It closed at 33.07 today. It's just above its 20-day, excuse me, it's just above its 200-day moving average. The question is, can it move up to over the 20-day moving average? Can it stay above, here's the big huge question, can it stay above $32 here? Now, I note that the 50-day moving average is overhead, but it's a little ways away from price. Again, the 20-day moving average is overhead. But again, we're just above the 200-day moving average today. So what I'm going to do here is I'm going to watch the IYZ into the coming week. Again, it's at 33.07. I want to watch, I want to see, is the next move down here to sell off a little bit and then stay above the 32 line? And is it to move up and over that 20-day moving average? If that's the move it's going to make, then I'm pretty interested in it because I think telecom can come back here. The RSI is definitely moving higher. The MACD here looks like maybe the black line can move above the red line. The MACD line can move above the signal line, although of course it's still above, I'm sorry, it's still below the zero line here. So my question is, if telecom can start higher here, I'll give it a move down to 32. And if it bounces off that, especially if it moves back up over $33, I will probably be inclined to add shares of the IYZ. And hopefully, of course, hope is not a strategy, is it? But then it may, in a positive market, have the strength to move back up toward 36. Should the IYZ, however, move below 32, my absolutely no kidding around stop, no matter what happens, is at $31.80. It's a tight stop, but that's where I want it because I don't want to be in this stock if it moves below that line under any reasons. Okay, so that is our chart, the IYZ, looking into next week. Now, let's go on to next week's economic reports. But first, be sure to join us for Tony's Market Club this coming Monday, March the 20th. We're going to talk about which side of the market to trade. That's going to be important. This coming week, I think, is going to have a lot going on. We'll have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity for you to learn more about the market and how it operates, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members a few minutes after the session ends. For more information or to join, go to tonysmarketclub.com. And for the coming week's economic reports, we don't have much going on Monday and Tuesday. On Wednesday, we have existing home sales and crude inventories. On Thursday, we have our usual jobless claims. We also have new home sales and our usual nat gas inventories. And on Friday, we have durable orders. Again, please join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.